With recent developments, entry into the 65 to 75 range becomes more plausible. Specifically, what's been happening in the well-defined 49 to 63.50 range, where there's been a definite shift from a neutral to bullish slope. In fact, there's even a more well-defined short-term slope up against 63.50, which becomes part of an ascending triangle formation. A Fibonacci wedge could be applied right at the beginning of the ascending triangles formation to define the initially stronger duration of resistance around 63.50, which of course began to diminish nearing the end of the triangle. Then we can apply that similar concept we learned in earlier sections for the trend line in order to better identify approximately when the conclusion to the ascending triangle is close. This first portion is when containment of price within the triangle structure is greatest. In fact, it's actually quite close to perfect textbook example proportions, in that the triangle can be divided into thirds, as demonstrated by this repeating interval of time that shows the boundaries of the triangle becoming weaker in terms of containing price as the chart heads into the second and third portions of the triangle. In this case, since price managed to stay up in the triangle after the second third, a successful breakout was much more likely over weakening resistance around 63.50 heading into the final third of the triangle.